Hi there, welcome to Market Call. Our guest today is Jaime Carrasco of Canaccord Genuity. Now, he is going to be taking your questions, your calls, your emails, your tweets on, let me check the topics again, precious metals and North American dividend stocks. Precious metals investors, now is your chance. There's the number, 1-855-326-6266. Or you can email us, marketcall@bnnbloomberg.ca. Jaime, thank you very much indeed for joining us.
You're welcome. Thank you for having me back again.
Let's just talk broad markets. I know we'll get into silver, etc. I know on the show, but how are you feeling about the broad markets right now? Of course, the TSX hitting records highs again today, but we are still in the middle of this lockdown slump.
Well, I think, again, last time I was on was the day before the U.S. election, and my comments remain. You know, I said that the election was just noise, but the real story is this reset that everybody's talking about. I've also said that along the way that we're 4 years late, because if Hillary had been on board, we would have had that reset a while ago. Debt is the problem, and debts have to be dealt with. So within that reset, gold is key, because for 4,000 years, you know, gold has been around much longer than the markets have been around. And the key rule for power is he who holds the gold is makes the rules. And one of the number one, you know, I'm looking at all these signals that are happening. And this week we had the SWIFT announcement that they're signing up with the yuan to do trading in the SWIFT system through the yuan. Now that to me is a massive important signal, because the SWIFT system is the arteries of the currency reserve. That's how money shifts around the world. So the fact that the yuan's coming on board is another chess piece moving towards the monetary reset that I see coming. And in that reset, we have to understand that the Chinese hold the most gold, so they will set the rules. Now, back to silver and the noise of everything else, I think, you know, why is the price being manipulated? We all know it's being manipulated. A lot of fees have been paid for having done it, but it's still going on. My approach has always been that, you know, if you're looking at 4,000 years of history, it's not going to be any different this time. And the value of the money supply as per the gold share between all central banks will once again be used to reset the system, because how are we going to pay these debts? There's no way forward. Actually, I posted yesterday an interview with DiMartino Booth and William, the Canadian central banker, William White, I think it was his last name. And the discussion was simple. It was about all of this excess debt that we have in the system and the fact that we've reached the rules of marginal return where we're not getting any more economic growth. So something has to be done. I believe that they're going to use the same formula that they've always used, right? And so that's why I continue to advise our clients, build positions in precious metals as a hedge for what I think is coming. And I continue to remain in that stance, because that's the big story, right? Everything else, the rise of the markets, I would rather wait till the reset is here and done before I jump in. In the meantime, build allocations in what I call the lifeboats of the financial Titanic. Just on one last note, it was a great discussion on debt, but to me the discussion flew more like two senior officers of the Titanic still thinking that the ship is the unsinkable, right? What's more important to me is, okay, how do we survive what's coming and thrive?
Yeah, but Jaime, let's look at gold over 10 years. If currencies are being devalued, how come gold is still down, for example, from where it was in 2011?
Well, I think that'll shift when we stop seeing 7,000 contracts being sold at 3 a.m, you know, when the markets are at the most illiquid time. There's a reason why that is happening. You know, again, I keep arguing. And by the way, I go back to those warnings by Terry Duffy, the head of the COMEX, back in 2017, when he said, we got to stop dismissing some of these factors, because he thought gold at that point should have been $5,000 to $7,000, right? And someday we won't be able to dismiss them. Why is gold being manipulated is the real question. Well, would investors be jumping into the Dow or even not questioning central bank policy if gold was sitting anywhere near those numbers, anywhere north of 3 or 4? Yes, they would, right? Because gold is being kept down, we are not questioning what is being done with the value of money. I'm a contrarian thinker. I think outside the box. I look at history. The net result of central bank policy has always been the same. Income inequality between the rich and poor, which we have greater disillusionment among the 90% of the people that are not getting that money. No economic activity, no economic growth, right? And now we have COVID. Another important point within this bubble that's ready to burst is what's happening with yields. Yields in the U.S. for long-term treasuries are starting to rise. Another signal that they're losing control of the yield curve, right? They can control the short term, but not the long term. So when you add it up and you look at how everything is coming, it's like a massive storm coming our way. Copper breaking out, that's another key signal, right? The global economy isn't picking up because of COVID. Well, why is copper breaking out? That's a clear indication that currencies are devaluing. Right. And again,
Jaime, I'm sorry to cut you off. We can get back into this, but we want to get to the questions because we know we'll have loads of callers. Let's take a break. Jaime Carrasco of Canaccord Genuity, 1-855-326-6266. Jaime Carrasco of Canaccord Genuity taking your questions on precious metal stocks today on Market Call. Also North American dividend stocks. We have an email here from Jack. Jack wants to know about QMX Gold. What's your outlook on this one?
You know what? That's a good question, and it goes back to why I like the precious metal sector. I believe I mentioned that a while back, about a year ago, when it was trading around a nickel, and I talked about it because we took a great position on it. The reality is that all of the projects like QMX, which was a mine that was dormant after 2011 and it was sitting mothballed, well, they're all getting started again, and they're going to get taken out. That's what I said at that time, and that's exactly what's happening with QMX. It's being taken out by El Dorado. I'm waiting because I think it's a great asset at this current price, and I think there should be another takeout. Now, let's talk about the bigger picture as to how I chose QMX in terms of how did I build a portfolio. Well, over the last couple of years, I've been building a nice, solid foundation of producers because they'll have the leverage. Last year, we added these projects that were dormant that are going to get taken out, QMX being one of them, and started buying within those because there will be amalgamation within the sector. And those are key because eventually they'll all be gone. And then you look at the exploration plays.
Okay. So QMX certainly on your radar there. We have an email from
not only
Ron.
on my radar,
Ron
on my book. I'm sitting on it and I'm waiting hopefully for another takeout. And in the meantime, I'll wait and see.
Okay, and talk to us briefly about M&A. Are we going to see a load of M&A, do you think, in gold? We have seen it plenty over the past year or so.
Well, let's look at the facts. We haven't been looking for any for almost 15 years now. So the exploration plays are dry. So these projects, I think we're going to have a lot of takeouts along the way of the ones that have been mothballed. That will happen. Another area that I do expect that we're going to have some amalgamation is within the royalties. If you look at royalty projects that are either ready or near production or where we can start building mines, which are permitted, and it takes 20 years to permit a mine, there aren't many. So I do think that this year we're probably going to run out of suitable projects for the royalty companies, and I think those will be amalgamating along the way. And then we have the big boys. I think the big boys are going to have to capture a buy out or buy companies that have found or started to find some of the good quality resources on the ground, right? So yes, I do expect quite a bit of activity. And by what I'm looking at when I talk to the guys on the banking side at Canaccord, which are extremely busy, they're the only ones at the office at Brookfield Place, and those guys are in there from 6 to 9 at night and working hard. So yes, there's a lot of activity happening in the back within that area, and it's only going to get better.
John is calling from Toronto. Go ahead, John.
I love the job you're doing. Always appreciate your comments, Jaime. I'm just going to make a side comment that 30 years ago, I paid $200 for my one-bedroom apartment in the Upper Beach area. Now they're charging $2,000, and I'm just pointing out the depreciation of our currency, and that's why you need to own gold. But my question is on copper. Jaime, what are your thoughts on Copper Mountain mining? I could have got it at 170, but it went up to $8 quite a while ago, and I was in a losing stock that I didn't want to sell, so I lost that chance, but it came back. But copper, especially with the future demand of copper increasing because of electric cars, what's your target? And I know I'm being greedy here, Jaime, but have you changed your $3.75 target on Marathon Gold, MOZ? Thanks so much to both of you, and go Leafs go. Thanks so much.
Go Leafs, go. Actually, if we're going to talk sports, Brady is the man this weekend to watch on copper.
Okay.
Copper, being Chilean, the biggest producer in the world, I'm always looking at copper and money devaluation. That's why I think copper is heading higher. I have not added a copper play right now because I'm concentrating on looking for silver plays, but I have begun to look for some. I did try to acquire one, but I think some people got too greedy, and I passed because there's plenty of them to come around. I have looked at Copper Mountain, and I was impressed with the assets, and it's one that I definitely have on my 5 companies that I've chosen that I will take a position in, and that's one of them. Ridiculously priced right now, like all of these companies are, and it has the leverage to the price. Now, again, with all of the resource companies that I'm looking at, 4 main criteria have to be there. Cost of production, where they are geopolitically located, because, again, I don't want an asset to be taken out by some, Kazakhstan government or something like that I don't understand. Good management and low cost of production. Reserves on the ground. Those 4 things, I think if you're looking for producers, that's what you want to be looking at. Okay? On the price of copper, Marathon, that was the other question. What is our current target? Give me one second and I will answer. Yes, $4. We just upgraded it.
Okay.
And it's one of the ones that we have it as a speculative buy, and it's one that we're quite excited about.
Okay, the stock's about $3, and that's the Newfoundland play, isn't it, MOZ?
Yes, it is. Yeah. Okay. Along with another great Newfoundland play that I added last year.
Oh, okay. What was that one? Okay.
Newfoundland. Yeah.
Okay,
NFG.
Let's get to another caller. Okay, what was that stock very quickly, Jaime?
NFG, Newfoundland Gold. Exploration play, though. Different animal than a producer.
Okay. Alan in Winnipeg Beach, go ahead, please.
And for taking my call. I'm interested in a company that Quentin Henney is involved with, that being New Legacy Gold. And I would be curious if you would be a buyer at today's price and how you see the company performing going forward. Thank you.
Well, I got to tell you that thanks to my blockchain acquisitions at this time last year, I've been buying quite a bit of companies, and that's one that I just added on that money raise they did. It is an exploration play, and I want to review how I have been choosing exploration plays. Exploration plays are about real estate and speculation. These are not companies with anything on the ground, but the possibility that the management and the engineering, the geological team is sitting on a real estate play with quite a bit of resources on the ground. They grow exponentially if they have it. They go to zero if they don't. Therefore, the first thing to understand that it's speculative play. It's not investing. Second of all, you want to diversify the risk. You want to have at least 5 of them at the very least, because if one goes, it'll pay for the losses of the other 4. Second, you want to have good geology. You want to be in areas where we have had some elephant finds, Arizona, Canada, Australia, Sweden, Ecuador, Peru, Chile is the areas where I have been finding some of these and taking positions. New Legacy is sitting on the Cortez Trend, which happens to be one of the U.S.'s most prolific areas to be discovered. We haven't had any finds in a long time because we haven't been looking. So the first one to find is going to attract a lot of U.S. money, and I think New Legacy has the team, the Barrick, all of the Barrick management has been moving over there, and I quite like the work they're doing, and I think it has a massive potential for an elephant discovery because they're in the right real estate. But again, it's speculative, and because of that, we have to look at it that way. Now we do follow it. So give me one second. I'm just going to bring up the target that our team has. We're at 30 cents actually on that. We have it as a gold rate. Hold on. No, we still have it as a buy. And we recently raised the target to 25 cents just back in September.
Okay. Let's take a break.
Now,
Jaime
actually,
Carrasco,
we have it
Canaccord.
at 30 cents. Sorry. We have it at 30 cents. That was in September. We've raised it to 30 cents now.
Okay, 30 cents. Jaime Carrasco of Canaccord Genuity taking your questions on precious metals and North American dividend stocks. 1-855-326-6266.
We're good. We're good.
Ryan is calling from Morton, Manitoba. Go ahead, Ryan.
Hi, Jamie and Andrew. Great program.
Hi there. Thanks.
My question is on HBM, HudBay Minerals. Are the concerns about the opposition to the new proposed Rosemont mine in Tucson, Arizona, too great to start a new position, or do you like HBM? And I'm also a 5-year holder of B2 Gold, so I've done very well there, even though it's really pulled back since summer. Would you continue to hold B2 if you've held it for 5 years? Thanks.
On B2 Gold, actually, I would have averaged down on the way down. HudBay will address in a second, but you just brought out a good point about holding longer term, because I've been building positions since 2015. Use asset allocation. If you started with B2 Gold as a 1%. Position or 2% in your portfolio, and all of a sudden it goes down to 0.5%, just bring it back, sell some of the winners and add to it. That process of automatically buying into the ones that's down is 80% of a portfolio's long-term return, because it takes emotion out of the equation. If you buy a good asset and it hasn't moved yet because the market hasn't come your way, continue to add by maintaining your asset allocation. Bring it back up to 1%. That's what I did over last year. As some other assets grew, just continue to add. On HudBay, give me 1 second. I was just looking at it. I actually looked at it because I'm starting to look at base metals. Haven't added any yet, and HudBay is one of those that I would be adding. We have it with a $12 target, and actually we have it as a buy. With HudBay, I wouldn't. Again, it's such a diversified company that that single project is not a bad thing. I would be looking at the overall exposure that these guys have, which is global in Peru, in Canada. So it's definitely one that's on my list to buy, regardless of that issue. If it's a negative, in a way, it just slows down production of everything. So it's positive on a long-term basis. If it comes through positive, well, it'll add to cash flow, which is great. So yes, I would consider it regardless.
Just on back to B2 Gold very quickly, Jaime, if we could. I mean, B2 Gold's been such a star over 5 years. The stock's up about 5-fold, which is incredible. In the past 6 months, though, it looks like it has lagged the gold group. It's down about 33%.
Again, you know what? That's
it's lagged. Sorry, it's lagged the other gold stocks a bit. Yeah. Sorry,
I get it. I have a number of companies that have lagged the other stocks, but it's again, I hope it's not your only company. For me, those that have lagged has been great, because I've added more. I'm not buying this for the short-term blip or the emotions of the flow of money that come in. Look, I posted something last night, which was the four accumulation phases we've had since 1100, 1300, 1500, and now 2000. Every time, those take time, they require patience, and they flush out everybody that came in on the way up thinking it's going to go up forever. So you have the flush out. Now, what I'm more worried about is building positions during these periods, because when they go, that same money, a lot of it will come back. So the emotions of the market, I don't particularly care. What I care more is about buying good quality companies. Again, Jesse Livermore, buy right, sit tight, and patiently build your positions. I think that's more important, because this ride is not for getting gold from 1800 to 2000. It's from the monetary reset that's going to take us way higher than this. And the leverage of companies like B2 Gold, they will all be making money. And again, companies that are actually producing and building out a mine, They're rare. Another thing, if money came in on the way up, it's going to come back again. It's also the fact that it moved so well, it's a really good indication that smart money comes into those. So to me, that's an even better signal that I should be adding into this company.
Let's take a break. Jaime Carrasco's past picks. He had a double pretty well on a silver stock. We'll be right back. Jaime was on our show February 21st of last year. Your first idea, Jaime, Fortuna Silver, a return of 90% on that one. And of course, silver had a great year last year and it had that big run up lately.
Still holding it. Love that company. They're building out a mine, massive leverage going forward. Once the mine in Peru is finished, that's going to be one of the most profitable and best silver mines in the world, and those are rare. So yes, that's definitely on the books and continues to be one of my top picks.
Why did silver outperform gold so much last year? It was up more than 40%, as you know.
Well, first of all, silver hasn't moved in 40 years. It's still sitting at the same price. That's a mathematical anomaly that can be explained very simply by what has been happening with the paper price of both gold and silver. To me, that's a massive advantage because I'm playing into that. I've started to overweight the silver side of my portfolio back in February, around $17, maybe around 15, and then we had that nice jump, and it's just getting going. All of these disruptions in the market between 1800, 27 here, to me, they're just tremors before the big eruption, right? What I'm waiting for is that big eruption, and what I want to capture are companies with good leverage to the upside in the price. One of the nice things is the dividend increases I'm seeing from the gold companies. And, we just had one of our silver companies just start a dividend this quarter. So everything that I've been expecting since 2015 when I started increasing allocations is actually happening. And the producers are going to be massive money machines when the price lifts. So at some point, build your positions and sit tight. Yeah.
Let's look at another idea. You had a Cisco Gold royalty. This one pretty flat over the period.
Yeah, that's still, it's one of the few royalties that has been lagging. It's still in the portfolio along with 5 others. And for now, I'm waiting and see. There's a couple that are going public that I quite like. And at some point I might review it if it doesn't take off. But for now, again, every time I rebalance the portfolio, I've ended up selling some of the ones that are moving best, like Metalla, just taking some money off the table. I don't like Metalla any more than royalty. I love them all, and just by being able to rebalance, I'm adding more of the Cisco royalty for the day that it either runs or somebody takes them out, or they take somebody out, right? Again, I'm playing the long game, not the short game, and I like everyone. I see these companies as surfboards in a massive wave that we're about to ride, and so I like my surfboards, and I just like to collect them. It's my quiver.
Cash was your last idea, so you were cautious at that stage in that sense.
Yeah, actually, I'm fully invested in both in the precious metals portfolio, what I call my special opportunities, because it does have blockchain within it. But in my equity income portfolio, which is the one for where I draw, for older people that I manage all of their money and I'm going to generate cash flow, I'm still sitting in 30% cash or cash equivalents, because there I'm sitting in physical gold as cash and also Bitcoin as cash since about February of last year, and that cash has grown quite nicely. Now I've rebalanced it back down to 30%, and I actually spent some blockchain on Exxon for the dividend, right? So again, I'm continuing to work with asset allocation throughout the portfolio. I know Cisco royalty is still part of it, and cash, it's all spent except for the equity income portfolio.
Let's take a break. Jaime Carrasco of Canaccord Genuity is taking your questions on precious metal stocks and North American dividend plays. 1-855-326-6266. Henry in Hamilton, Ontario. Go ahead, please.
Noon, gentlemen. Fosterville South made it into the low threes, now down to $1.80. Is this a reflection of poor drilling results or poor sentiment? Please, your thoughts on FSX. Thank you.
I think it's. I personally think it's poor sentiment more than anything because everything's pulled back. This is one of the 5 that I chose. Fosterville was the mine that turned Kirkland Lake into what it is today. The geology's there. It's similar. It's kind of like the sister project. So that's why I took a position. It's early on, right? We have to let the drill play out, and we have to let the emotions of the market run through. The other thing is I ended up with a new company called Leviathan that I believe started trading yesterday, but I have not looked into it. I'm quite happy to hold on to those shares. But yeah, I think that this is one in Australia, which is prolific, in an area where there have been big discoveries. And again, so to me, I'm on the right real estate, but don't forget that it is speculation. It's not a company that is making any money. It's about we are giving them money to make sure that when they drill, they might discover something. And I do think that the potential's there. And when you start a drilling campaign, what you're doing is you're starting to define into the ground, and you have to be patient, right? And that's the portion that most people that come into these stocks don't have, the patience or the wherewithal to hold on. Now again, have at least 5 of them, and make sure that it's not the only precious metals position you have, because these are not precious metals companies. They're exploration companies. Mm-hmm. They have to find it first, then they become an exploration a precious metals company.
So just clarify for us. So Fosterville South, is it a spin-off from Kirkland Lake? It trades as FSX on the venture. Oh, sorry.
Yes, it's not a spin-out.
Go ahead.
It's a property near where Fosterville is, with the same geological structure, being drilled by the same team that uncovered Fosterville in Australia. Right. So again, same management, same geology, same real estate in the same area. To me, it sounds like, yeah, this is one that I want to own. You want to be in the areas where they've already found a massive deposit. The geology's there. So again, you're trying to check the probabilities of discovery and a big discovery. I'm not looking for 800,000 ounces. We're looking for similar structures as Fosterville, and that's what my attitude with regards to these, by the way, the big discoveries, the big areas, the big real estate's going to be all gone within a year. Then we're going to get stuck again with 2011 when we were looking at very small possibilities. I'd rather have an exposure into the place with big possibilities of discovery.
Okay, yeah. So it's nothing. It's not connected to Kirkland Lake. It's just in the same people, as you say, in the same geography. Thanks.
And
I was confused.
Geological footprint. Yes, correct.
Okay. Hansi in Victoria, go ahead, please.
Morning, gentlemen. First of all, thanks for taking my call. I am one of your first-time callers, and I really enjoy your show.
Great.
Yeah, I would love
Thank you.
Thoughts. Thank you. I would love your thoughts on Enbridge. You know, it pays good dividends. I don't know if it's overvalued in price. Would you buy it at this price? I will hang up and listen to your comments. Thank you.
Well, if you were coming into the practice today, and considering your age, I would definitely be looking or reviewing with you the equity income portfolio, and that one sits in there. Enbridge has been a steadfast hold within all of my equity income throughout the years because of the dividend. I know that dividend's going to be paid. I know that it's a massively big blue chip, and to me is the one gauge I've always had as to what current dividend rates are at. 2000 now. The way I play it, though, is through asset allocation. So in that portfolio, I raise cash to 30%. And what I'm waiting for is to see good quality dividends at high fat rates. That's why I added Exxon, because all of a sudden last December, I was looking at it at a 9.5 dividend. My asset allocation in energy, which I had reduced already in February to half, had become less than a quarter of what it usually is. And I added Exxon because the dividend was 9%. With Enbridge right now, we're looking at a 7.42 dividend, which is actually quite rich. So yes, I would be adding it for the dividend because I'm quite comfortable with that dividend. That's going to continue to come from my cash flow clients. And with the dividend tax credit, we have to get about 13, 14% equivalent from a bond, which it's non-existent right now. So yes, I would definitely consider it for anybody in what I think is your age bracket. By the sound of your voice, I don't mean to be rude if I got that wrong, but yes, I would.
Okay, Conrad in Wolfville, Nova Scotia. Go ahead, please.
I'm interested in dividends too. ZWC. I was wondering if the dividend is safe, and wondering why it's only rated a 2-star fund. So I'll listen.
I don't know anything about ZWC, but I took the call because it's an ETF. First of all, when it comes to ETFs, I have to make sure that they own shares and they don't own futures derivatives. Because if they own futures to create that pool of investments, what they own is an IOU from a too big to fail institution that's promising you to pay the money. But if that institution is gone one day, so will that IOU. So the risk to me is not worth it. I'd rather develop and build a portfolio of actual companies like Enbridge, where I know what I own and how many shares I own, and I know that dividend is going to continue to come, versus the possibility of an IOU from somebody that I don't really know who it is. My rule of thumb, 2008, I saw it coming. Fool me once, shame on me. Fool me twice, or something like that. I always get those expressions wrong, in the translation. But yeah, I'm very cautious of ETFs. I do have some closed-end funds where I know what's being bought, especially on the physical gold and silver side. But I would be very uncomfortable if it was created with using future contracts, which most are, by the way. I think 90% of ETFs out there are using future contracts, not actual shares.
Okay, I'm not sure what the structure of that BMO one is. I know you weren't specifically talking about that one. Okay, we are going to take a break. Jaime Carrasco.
I didn't mean to interrupt you. I just wanted to say that I don't know anything about that particular one. I just wanted to be cautious with viewers about the structure of how these things are built.
Yes. Oh, that's a good piece of advice. Jaime Carrasco is taking your questions on dividend stocks and precious metals. We'll be right back. Andrew in Toronto. Go ahead, please.
Hello, Andy and Jaime. Jaime, to take your analogy of surfing, what is your outlook on Bear Creek, and are there better plays in the silver area? Thank you so much.
Thank you.
There's always better plays. Is it suitable? Yes, it is. I have this in my in the special opportunities portfolio, my precious metals portfolio. They have a great project. They're building a mine in Peru, and when it's done, it's going to be one of the biggest projects out there. We currently have it. We just raised our target up to $6. We do have it as a speculative buy because it is in the process of building, so it'll take a bit of time. But it's one of the largest undeveloped projects in the world right now. So it's one that I want to have a stake. And luckily, because of asset allocation, I actually bought this 3 times. I added more 3 times last year as we rebalanced the portfolio, and I continue to hold it, and I'm patiently waiting for it to start up on higher silver prices. And it's one that another quiver that's sitting there waiting to surf.
Colin in Muscle Lake, Ontario. Go ahead, please.
Great job, Andy. Thanks. My question is on Kirkland Lake. Like, what I don't understand is they produced 1.3 million ounces of gold last year, 30% growth since the year before. So their all-sustaining cost is $800. That means they're making $1,000 on every ounce they sell. Not a bad business. They pay a dividend of almost 2%, which is better than any bank, right? And they have over $800 million in cash, no debt, and even the Detour Lake, purchase, which they got punished for, has turned out to be a good bet because their production cost there is $900 and their production there is up 900%. These guys are even making money on their sidebar bets on Cisco and other trades. Why is this stock so out of favor? I just don't get it. It looks like a bargain to me.
It's for smart people to take a position and buy right and sit tight, which is what I've been doing. And in the meantime, as I wait, my dividend keeps increasing. They just increased it again. And it didn't have a dividend 3 years ago, and here we are. One of the things I said is that if history is repeating, we'll go back to the 30s when gold jumps from $5 to $7. Sorry, from $7 to $35. Those producers that were at $5 making $2 profit at $7, all of a sudden have massive cash flow at $35, and the dividends go through the roof. Well, equity values are there, the dividend is rising, everything's repeating. So to me, that's one of the ultimate longboard for this ride, that Nico Eagle and others that are companies that I'm just sitting on and continue to buy. So if the price is down, all the better for me, right? And the same for you. So if you can, add more. And wait nicely. The management continues to execute. I used to own Detour. I got into it at $6 years ago. I think it was around 2015. I was so happy that they bought me out, but I was also happy that I owned the company that bought them out. So the strategy continues to work, and Kirkland Lake and Detour internally, to me, is one of the best, because that really changed the structure of the company, where we have a shorter mine life, high grade, and a longer mine life, lower grade, but the two create a beautiful money machine, and I'm quite happy to own it. And anybody that wants to sell me more, I'll take it.
We've got Phil calling from Nanoose Bay. Go ahead, Phil.
For taking my call. Jamie, twofold question. You made some comments on Enbridge, and my question regarding Enbridge is that Governor Whitmer in Michigan has asked or has advised them that they want the Line 5 pipeline closed by May. This was advised to them in November. And that's a sizable amount of oil that they're pumping through there, about 540,000 barrels a day. Can that, if the market is forward-looking, that's a significant impact on Enbridge's day-to-day activities. And how will this impact also Suncor when on Thursday they've announced that they bought a full stake in the Portland to Montreal pipeline? Is Suncor at risk here? So I'll just hang up and listen to your comments. Thanks.
Let's talk about the energy complex within my equity income portfolio. First of all, I reduced it, right? There's pipelines in there. I'm holding on to my pipelines at the same stake as always, because you have to understand that pipelines are monopolies. The fact that the XL line is being shut, is not going to be built, or this one's being shut down, all it does is create greater demand, because we need to send this energy throughout North America. We need to get it through. The bare minimum economic activity requires a bare minimum of energy, and it's not going to be electric because we don't have the electric capacity. If everybody, if 10% of the population change over to a Tesla car, well, electricity rates would go through the roof, because we just don't have the electric capacity in Ontario, because we're not willing to build nuclear plants. So as far as pipelines are concerned, to me, they're long-term investments, and all of these positive, negative signals just means that I'm going to be buying more and continue to hold on to them, right? So you have to look at it in the content of the global of the economy that we're living in, and there aren't any pipelines being built. So the companies that are out there with pipeline, all it means is that they're gonna raise rates to the end users, and the dividend's going to stay, and we're going to have supply crunches that are going to be beneficial for the stock shares of those very same companies. You got to do the full loop of how these companies make money, and the fact that we don't have many, and the ones that are there are there, and those are it. So to me, it's a beautiful thing. Again, you got to be investing instead of speculating.
Oh, okay.
Suncor,
I want to keep it moving.
Perfect. Canadian Energy, I'm still not. Go ahead.
Okay, we've got to take a break. I'm sorry about that. We've so much ground to cover, Jaime. We'll be back. We're going to have a look at his top picks after this. Before we get back to Jaime, let's have a look. Oh, you're back. Okay. It's great to have you here. Jaime Carrasco, Canaccord Genuity. Let's get to your top picks. Your first idea is Calibre Mining. It's a Nicaragua play.
Yes, it's a up-and-coming producer. Again, I've been looking at adding producers that are in the build. It's currently trading at a great price. We have it with a sorry, hang on a second. In that little accident we just had, we dropped the computer during the blackout.
Okay.
And I've lost everything on my side. So I've just lost the target. I will bring it up now and we can go to the next one and then I'll find it in the meantime. Caliber.
Okay, we'll move on. Your next idea, First Quantum Minerals, a serious player in the copper market.
Yes, I wanted to add copper, and I haven't added any, so I'm giving people a heads up. But that's the one that stood out the most. Copper, I want the leverage. Copper is, again, the global economy isn't picking up, but the price of copper is breaking out. So to me, it's a signal that the currency devaluation is actually happening. So I want to own copper, and that's the one that stood out the most. Have not added that yet though.
Okay. And then your final idea, ExxonMobil. You touched on this earlier, Jaime. Of course, the company out of favor. Some critics say they're curtailing their future growth by sticking with that big dividend.
Well, they just said they weren't going to cut the dividend. This is important because back to the Suncor question just before the break, I'm not adding Canadian energy yet because I don't like government policy towards the energy companies, and I think we're going to harm them. But I am adding energy on a global basis. I'm not concerned about the dividend. They said they weren't going to cut it. Exxon has some big discoveries in Guyana. They're up to 9 billion barrels. They've already found everything that they underwrote a couple of years ago. So going forward, they're sitting right now in some very cheap oil in the country of Guyana, north of Brazil, geopolitical risk-free, apart from being beside Venezuela, who wants a bit of Guyana right now, but these are over on the Suriname side. So, and they keep finding it's the same equivalent as what's on the other side of the ocean in Africa, but I'd rather be in Latin America than in Africa any day. So Nigeria versus Guyana, I'd rather take Guyana, and I've been actually participating, looking for oil there for 20 years. So Exxon definitely 9.5 yield is where we got in right now, about 7. It's still a really good play, a really good piece to add.
Fascinating stuff, Jaime. Thank you very much indeed.